Hi, and welcome to the X22 Report Spotlight. Today we have a new guest, Polny. He is a market cycle analyst. He's the creator and owner of Gold2020Forecast.com, and he's made many successful forecasts. Back in 2011, he said gold would hit the top at 1900. July 2015, he said U.S. stock market would hit the top. August 2015 would be a temporary low for stocks. And we have Bo Polny here today to give us his new predictions on the economy and gold. And I'd like to welcome him to the X22 Report Spotlight. Welcome, Bo.
Hi, David. Thank you for calling me, and I appreciate being here. Thank you so much.
And I appreciate you coming on here and giving us all the information you're going to give us today about gold and the economy. Let's start out with the economy. Now, we know the corporate media is telling us that pretty much everything is fine. The economy is doing well. The Fed raised the rates. In your opinion, where do you see the economy at this point, and where do you see it going?
It's going to crash this year.
This year?
Yes.
And why do you think it's going to crash?
Let's go back to August of 2015. Okay. Markets crashed. Dow fell over 1,000 points. Everybody's screaming, "Oh my gosh, Dow's, all these problems." And guess what happened? Market rebounded, correct?
Correct.
And it rallied all the way back up into October, November of 2015. And then it crashed again in November, crashed again in December, and then crashed again in January. Okay, so we have 3 crashes in a row so far, okay? And in January, remember when the markets are crashing, when we made in January of 2016, all the August lows were taken out across all world markets, okay? And if they weren't there by February, all the world markets, we have made lower lows below August of 2015, okay? So that's a bearish trend, okay? So I don't care what the media says, what the news says, because it's completely irrelevant, because the cycle itself is predetermined and it's set into the future already. So everything the media says and does is smoke and mirrors, okay? But the reality is of what's coming, that's not going to change. And so when I was on Future Money Trends in December, I basically said, to Ken on the interview, I said, watch January. All the August lows will break. Go, whoever wants to confirm, go listen to the interview. All the August lows were supposed to break in January across all the world markets. And we nailed the month and what would happen. That's pretty extraordinary, okay? The point of that being is that when that was happening, I sent out an update to all my subscribers on our stock index and basically saying, we were supposed to be a low, and everybody knew the low was the 3rd week of January. And then from that low, we had an up cycle. Well, guess what's happened between the 3rd week of January of 2016 into right now, which is March 3rd. What's happened? The market's done what? It's gone up. But that was the cycle. We had an up cycle into today. So when you called up for an interview and you said, hey, let's do an interview, well, the fact that you picked this day, I was going to suggest it, but you picked this day, and it was beautiful because basically it's finished. So everything you're seeing in the market today, it's whatever's being said is irrelevant, but the cycle finishes. It's over.
So
just like December was a high, just like when I did an interview with True News on the 20th of July in 2015, I said, it's over. The stock market topped today. It's finished. It's going to crash now. Well, look what happened in August. Boom. And then December down. And then January down. And right now, this is it's a rebound off every low's a lower low, and then you get a bounce. So this is nothing but a bounce, but it's over.
So when you say the market is finished and it's going to crash right now, are you talking like this is the major crash that's coming right now, or we're just going to see it start slipping and sliding lower?
Slipping, sliding, then melting.
And there's no way the government, the central banks can manipulate the market and push it back up. I mean, does your forecast see anything like that, or you just see it completely crashing at this point?
The fact that we've called every single turn in the market since July, you can go back, check our interviews, every single turn has been called since July. This is a cycle turn right here.
So as the
That,
market,
sorry, so nothing that everything they've done so far, everything that the central planners, everything that the markets have done and the economists have done to the markets have confirmed the trend since the 20th of July.
so as the market crashes, what happens to gold? Because we see gold has been around 1200 or so. I mean, we saw a little pop up, but then it was suppressed once again to around the 1200 mark, and it really hasn't moved from that area. Yes, it was down around 1100 and change and moved up to 1200, but it's been staying in that area. And there's been a lot of people out there saying that, oh, gold is going to surge, to 2000 to 5000. What are you predicting with gold?
Well, gold's going to go to big numbers, like I've done other interviews. If everybody is so fixated as a psychoanalyst. To me, I care about time because I do mathematical calculations based on time, and at certain time points, inflection time points, there are highs and lows. Okay.
Okay.
So to me, price is very much less important than the time patterns. Okay, but on those time patterns, you'll get critical highs. So we have several, so gold's got it's got an up and down pattern for years to come. We did an interview again on the 3rd of December, calling the low to the exact date with Ken at Future Money Trends, and that video is on our webpage. So on that day we said today is supposed to be the actual bottom for gold on the December 3rd, and that was at $1,045. Okay, well look at gold today; it's up like 17 or something dollars. Last I checked, it's over 1250. So it's roughly, what is that? It's a pretty significant rise from $1,045. The point is, it's an upcycle. Okay, and so now these are biblical cycles. So the cycle started then, and it's like you've got like years now forward. Okay, so it ain't going down, it's going up, and there's going to be inflection points. So if you look at potentially if you want to price, the minimum on gold we're looking is $5,000, but that's not tomorrow or this year. Okay, it's years out. But if these inflection points, these time points are hit sooner, then you have to, if 5,000 gets hit before the long-term cycle ends, then potentially you can go to 10,000 or higher, right? So it all the matter of how high the first cycle goes, if that is a good way. But so if you're looking at potentially where could it go, well, minimum 5,000. So there's a lot of room to the upside, and then it could go a lot higher. It depends on how much money is destroyed in the years to come. Because if all the money today isn't destroyed, if derivatives and all that stuff isn't destroyed, right? Well, then you can have extremely high numbers in terms of price. But as the markets are going to crash and collapse, a lot of the derivatives are going to blow up and basically become worthless. So that would, ultimately reduce some of the money supply.
So you're talking about derivatives. You're talking about gold surging to 5,000, and you're saying it's not going to happen this year. Gold most likely not going to surge to 5,000.
Right. But we're going to have an explosion in price soon. It's going to be going. We've got basically very large projection in price patterns. Gold, it made its bottom, it shot up. It paused right now. When I was in Greg Hunter, it took out, they're moving averages. So you have like a 50-day, you're a trader, so 50-day, 100-day, 200-day, 300-day. So you have the moving averages, okay? Well, go look at gold. It's never taken out the 500 or 600-day moving average like in 3 years on the dailies, okay? And it flew through it like a knife through butter, and it did that on the 11th of February.
So
And since then, it's been sitting above it. So now resistance became support. And so now you've got a pennant formation, and from the pennant formation, you have another measured moved vertical.
So back in 2011, we had gold, it topped out at 1,900.
Right.
Do you see gold reaching 1,900 this year?
Oh, I think it's going to make a new high this year, soon.
Okay.
It's going to be a price explosion, because what you're going to have is a derivative meltdown. Everyone's going to run to the only asset class that people have run to for 5,000 years. So the one thing that's been money forever is gold. Like I did an interview with another gentleman, last week, and I was joking, people buried treasure, they buried gold, right? Well, if you found a map today, you go find that gold, guess what? It's still money, okay? But any paper that's in there would be worthless.
I guess if you buried the dollar, 50 years or 60 years from now, it wouldn't be worth anything.
That's the point, right? And so the world is going to always, when faith and confidence breaks in the system that you believe to be functioning, when faith and confidence cracks, it doesn't have to be destroyed right away, but the moment the faith and confidence is questioned or cracks, right? Then people are like, wait a second, right? They start to question. The moment that happens, our world is basically all computerized now. So it's not going to take more than hours to have a price explosion.
So if gold is going to go up, what happens to silver?
Well, silver, because of the ratio 80-1, right? It's on its extreme highs right now. I think it's like 83 or something, or 82-1 just last Friday, okay? But that was a cycle low that we had last week. So we were looking for a move here. So the ratio is going to get, it's going to go from 80 to probably to 75 to 70 to 60. And so the ratio is going to narrow. And so the ratio is going to get smaller. So if gold doubles in price, right? Silver won't double. It'll go 3 to 4-fold. Because they would take silver to maybe 40-1 ratio. Okay, so when gold's at a double price over $2,000, silver would be at least 45 to 60. It would have because a 3-fold increase in silver would take it to say 45. A 4-fold would take it to 60. Would take it to new all-time highs. But silver, it would have to narrow the gap, and so it would take the ratio of being 80-1, eventually down to 50-1, 40-1. And so it'll narrow the gap, but it won't get I don't believe it'll get the 10-1, which is like the true ratio in ground for years to come yet. I could be wrong. We'll see. But, I think that's going to be still years down the road. But silver ultimately, if it gets ever, it will get back to 10-1 minimum at some point. And so if gold's 5,000 at 10-1, what does that put silver at? $500.
Right.
Yeah.
So do you see any events like in the news or anything that might, speed this up or slow it down? Do you look at anything like that with what's happening geopolitically or here in the U.S. or to figure out where gold and where silver is going to go?
Well, that's the thing, to me, everything I've discovered I do, it's through my computer, but basically looking at chart formations. It's mathematical calculations off of major cycle lows and highs, biblical calculations, and then I take it a step further and I do pattern analysis on charts. And so it's pattern replication. It says, in the Bible, that which has been will be again. There's nothing new under the sun. But what that means is, from a charting standpoint, is you can take a historic chart from 100 years ago, from 50 years ago, or 10 years ago, and as long as you know where to look, that's calculated through some of the numbers I use. You can overlay the charts, and that's how I can forecast and project what's coming. And that's like for the stock market, right? I've done that, and I have the chart, and so my subscribers actually get it. And these time points we've had, like the last update I did in the stock market cycle, I basically said, I gave them the chart from January, and I actually drew what it would do from the low third week in January, and I showed what it would do into March. And it did it perfectly, okay? And so that was my last update. So the point is that these are mathematical calculations and then overlaid with chart patterns. And so we have the chart pattern for gold after that low came in, and all we know is that we have, we have a bull market, and that is higher highs and higher lows. So each low is going to be higher, and each high is going to be higher, and that is a bull trend for gold. However, the big issue with gold here, David, is they've suppressed the price for 5 years, 4 years, whatever you want to call it, okay? So this is not going to be, $10 moves on gold. When it goes, it's going to go. It's going to be a historical move to reposition itself, to reprice itself. It has to reposition, it has to get back to where it needs to be because they've suppressed it. It's in a wedge, and when it explodes out of the wedge, it's going to go very powerfully to get back to a neutral price. And a neutral price pattern, and what I mean by neutral price pattern is take a 15 or a chart on gold going back to the year 2001. Okay? Run a
Gold is going to surge this year. Now, is it going to surge in the beginning of this year or the middle of this year or the end of this year? Can you give us that type of time frame?
I have it. I can just tell you that surge itself is going to happen anywhere between now and October.
Okay.
Okay, so all the world changes are going to happen between our interview here today, because when I was on Greg Hunter, I said that you have to have your gold and make sure you've got your if you're doing things in the stock market, you want to be out of the stock market. But basically, the end of February was a critical time point, and so as of this time point, gold is expected to have, because remember the bottom's in, and so as the bottom's in, it's a bull market, and so we're going to have higher highs. I believe we're going to have explosion quite relatively soon in terms of price. And the price is going to keep escalating higher and higher, and that's as the world markets are falling and collapsing. So they're going to be inverse cycles, because if you've looked at what the stock market has done relative to gold, they've been inverted since the year 2013. 2013. So at that time point, gold dropped, stock market went up, and that's why this time around, people are expecting, oh, gold's going to go down on a stock crash. No. That ain't going to happen. What's going to happen is you're going to have the dollar go down with the stock market, okay? And like I said on the interview with Greg Hunter, see, the problem is if you have even a 10% devaluation or a drop on the dollar, okay? If people are holding the stocks, when they go back, everything becomes worth less, that percentage, whatever the percentage is. Even bonds, if they give you a 1.7 yield, if it drop, even a 10% drop will still give you almost an 8% loss after you go sell your bonds. So a drop in the dollar is going to be very, very significant, because that's going to fall with the stock market. And so you're going to have like other currencies like the euro and other currencies rise, which is, people are like, oh, that's not going to happen, but it will, because ultimately they're all the paper assets are going down. It's not like I think a euro is a good investment. I'm just saying that the euro's had its time to the downside. Now it needs a little bit of reprieve here, and the dollar is going to be, they're counter trends. They're paired. They're paired. So as paper assets, from the stock market dollar fall, that's going to cause gold to jump and jump and jump and jump. So it'll be a lot of big moves here. It will not be near the end of the year, even though it's going to keep rallying. The big moves come sooner, and that's kind of what I was trying to get at earlier, is that you have a 5-year wedge. It's an explosion out of the wedge, okay? So you're going to get a price explosion because of the 5-year price suppression. So it's not going to be some easy trade that people are going to go in and say, well, I'm going to wait till gold confirms that it's a bull market. It's already confirmed it's a bull market, okay? But if you, it's because it's already making higher highs. It's taken out the 600-day moving average. The 600-day moving average is now support, okay? So it's taken all the dailies, moving averages are all broken. So you have a lot of bullish momentum to the upside. And so if people are waiting for, confirmation of a bull market, you already got it, okay? And so if you wait too long, when the price explodes, you're going to be paying significantly higher prices for it just because you waited too long.
Now, these surges of gold, are we going to see like $100 moves?
Yeah.
150. So at that point, people should say, okay, gold is on the move right now. I better do something.
Right, but then what's going to happen is people are going to buy that and they're going to smash it down. So you buy leveraged positions, you're going to get, you're not going to have real fun with that. It's like, so every time there's a price explosion, it's going to be, it's going to jump down again. They're gonna, so it's an explosion, it's a pull down, and it's going to be hard to catch it, just like you saw happen on the $60-$70 day that gold jumped $60 or $70 on the 11th of February, right? Everybody who bought that spike, look what happened. It went, it went sideways for like 3 weeks, and so everybody's now waiting for it to drop, and could it go lower? Maybe, but I still see a lot of movement to the upside, and so if you're just not positioned in it, it's going to be a hard, it's going to be difficult, because every explosion is going to be followed by immediate, they're going to it's going to come back down again. Then it's going to explode again. So it's just higher, but it's going to be very volatile, I guess what I'm trying to tell you. It's not going to be, some easy trade.
So it's going to be like a staircase effect where it's going to continually move up as we go throughout this year. Even though they're trying to flash crash and bring it down, we're going to continually see it move up, though.
Right. That's basically what a bull market is. But each move will be potentially bigger and bigger, and I foresee the first few moves being pretty epic, like epic. They're going to be not just you'll have some pretty crazy days, large moves, especially when you start seeing the market start to melt. I think you're going to see just a complete flight to safety, and a flight to safety meaning gold. That's money.
So as gold is going up, the dollar value is going to decrease.
Right.
So is this what everyone is talking about? Inflation, hyperinflation with the dollar?
Well, no, because that's first a derivative bubble popping and everything basically crashing and gold exploding. Then the money printing starts.
So you were saying that the central banks, the Fed, are going to start QE4?
Yeah, don't be surprised.
Okay. So how bad, you're saying the market's going to crash this year. How bad is the crash going to be for the everyday person?
Well, again, see, now you're talking events, right? And so when it comes to events, it's everyone's like, oh, what's it going to look like? And the problem is, as a cycle analyst, I can't foresee events. Like, I don't know what it would look like. But all I can say is, go back and look historically. And what was it like historically? Okay. So from a cycle perspective, this is supposed to be, David, a biblical cycle that completes. Now, if this ends up being what I think it is, this is a completion of a 252-year cycle that basically started the Monetary Act of 1764, okay? So if this goes back that far, and this is a completionary cycle to it, basically it's supposed to be worse than, the Great Depression, all those combined, because it's a crack of the entire monetary system, and it's going to be a complete flight to gold and silver as hard money. And you're going to see premiums explode, faith and confidence crack. They're going to start to print money just to try to prop it up. But the problem is, they've done that already. It didn't work. So no one's going to buy it this time. But everything will get more expensive, obviously, because the money supply is going to explode.
Everything's just going to explode. Do you, are we talking about the market coming down 2,000 points? I mean, we're in half?
No,
if we compare it to 2008, where we saw this huge crash and the market was almost in half at that point. And then we saw companies, all of a sudden started laying off thousands of people. Everyone was running for the doors. Are you, in your forecast, you're seeing something worse than that?
Well, see, here's the thing is the markets are propped up right now. And even though the cycle's been playing out itself, but the problem is that there's still a long target to the downside, okay? So this would be a guess on my part, but don't be surprised that between now and the time point we have in October, that will not be in October or it'll be sooner rather than later, okay? But there'll be again, we have the time points. I just can't give them out because a lot of subscribers have them. But the point is that on that cycle low to get there, okay, there might be days where the Dow drops 3,000 to 4,000 points in a day, okay? And so 1,000 points of last August will be a joke compared to what's going to happen here.
Okay. So when this happens, what do you predict anything happening with the credit markets, or does everything just freeze up at that point? Do banks shut down?
I don't see, again, question about, I don't have an answer to that because I don't those are, I can tell you when, price projections, but I can't tell you. The events are just there's nothing but a guess on my part. But I think an analyst like yourself, who basically been in the financial system for a long time, could probably get a pretty good idea of what that would look like.
Okay, so we see Russia, we see China, and the central banks since 2008. They're purchasing a lot of gold right now, and we see that China is going to start the yuan-based gold price fix. Now, does this have an effect on what you've been talking about with gold surging?
Sure, all of it does. It's, it all ties into the cycle. But, other countries have been accumulating gold. Why? Because why do countries accumulate gold? Because they know it's money, okay? And so the low prices have given them nothing but the ability over the past few years to accumulate more and more gold, okay? But at some point, the game's over. And then you have the big shift, and it's going to be quick and dramatic because again, it's computerized. Okay, everything's black box. It's all computerized, so it will be a quick change of events that's going to happen. And so it's like at the end of the day, like I said, when the dust settles, you're either you're on this side of the fence or you're on that side of the fence. But there won't be much time to react. So you need to position yourself before all the events occur. And so my subscribe, it's like, I tell everybody the patterns that I'm seeing, and then you have day points, right? And so all you do is you position yourself and you wait. And and it's hard. I know it's hard to wait, but the patterns have been playing out beautiful. So it's a matter of if you're going to do something, you need to know when, and just hold that position until because it'd be too hard to trade it as it's all coming unglued.
So for my last question, from your models, how long will this last, this trend where everything's falling apart and gold is going up? How long do you see it lasting?
Years. This won't be the recovery that you saw in 2009 where it jumped back up and it went back up. It's a triple top. It's pretty easily seen. So the best illustration, if somebody wanted to see what it looks like, take a 20-year monthly chart on London. Okay. And what you'll see is a band like this. So take a monthly chart, and it's literally it's a band that goes like this for 20 years. It went up and it went down. It went up, it went down, and it went up. Okay? So 2001, 2003, 2007 or 8, 2009, 2015, and now you have so basically the lows around in the 3,000 on the FTSE. But it's called a triple top. So you go boom, boom, boom. It's a triple top and then a failure. But after you fail the third time around, it's game over. So it either has to explode on the third and go vertical, and that'll be true faith and confidence in the system. So the system corrected itself and it went up. But on the other side of it, if it doesn't correct itself, it's a failure. And all the world markets broke their monthly wedges back in August of last year. I can show you this right here. So here's I don't know if you can see this here, but you see all those wedges? This is like the subscriber update, but the point is, what you see is all those wedges, okay? They're all broken. So all the wedges broke in August. And so because all the wedges broke, that's faith and confidence cracking in the chart. And so what you're going to have is just the markets, they're lower highs, and eventually just failure. And so all the world markets, that was literally what I showed you was Australia, Toronto, London, Hong Kong, Japan, Switzerland, S&P 500 in Germany. There is no difference. They all have the same wedges broken in August, okay? And so ultimately what you end up having is failure and the meltdown. But that's going to be, so the meltdown could be, that's what I'm talking about, those massive, drops, because it could hit, the lows back of what we saw on some of the world markets in 2009.
Okay, Bo, thank you for being on the X22 Report Spotlight. How can people see your work? Where do they need to go to see this?
On my webpage, gold2020forecast.com. What I would suggest is there's a few videos that we did, and watch the videos. I kind of explain cycles and how our analysis works, but I try to illustrate what we do. There's just a lot of interviews that we've also done. We put below there as well too. But there's some of the, you listen to some of the prior forecasts, and really it's just a matter of getting yourself educated, because it's going to when this happens, it's going to happen quick, and people will be caught flat-footed. And they're going to say, oh, we didn't see it coming. Well, if you listen to our interviews and listen to things that you've been talking about as well, yes, we saw it coming, but but no one paid attention.
Right.
Okay. And so at the end of the day, when the markets do melt down, when gold does explode in price, you're going to be spending exorbitant amounts of money to buy gold, if you can even get it, because not many people are going to probably want to sell it, and silver, or the premiums will be explosive. And on the other end of it, what's going to happen is your money that you would have used today to buy it would have maybe dropped by 50 or 60 or 70%. So you're using less money now because of the stock crash to buy the precious metals. So you're basically, you timed it terribly. So people they thought everything's fine because the markets rallied up here into March 3rd. Everyone's like, oh, it's all fine, everything's great. The markets are going to rebound. That was a low in December/February, and March as the markets are rallying. It's all good. No, it's not. It's game over.
Bo, thank you for being on the X22 Report Spotlight. I appreciate it. Thank you very much.
Thank you, David. Thank you.